Investors experienced a mixed bag on Wall Street today. The Dow Jones Industrial Average inched higher, gaining a slight 0.1%. However, the S&P 500 remained relatively flat. Meanwhile, the tech-heavy Nasdaq Composite faced a downturn, slipping by 0.4%. This mixed performance reflects the uncertainty and anticipation gripping the market. Investors are carefully assessing corporate earnings, particularly in the tech sector. The shadow of upcoming announcements, especially from Apple, is adding to the cautious sentiment. Despite the overall uncertainty, some sectors showed resilience. Financial companies buoyed by strong earnings reports provided a counterpoint to the tech sector's volatility. This contrast highlights the dynamic nature of the market, where different industries experience varying degrees of fluctuation. As we move forward, investors will continue to scrutinize earnings reports. The market's direction in the near term likely hinges on the performance of tech giants like Apple. Their results hold the potential to either solidify gains or trigger further volatility. Earnings season for tech giants has injected a dose of volatility into the market. Investors are carefully dissecting each report, looking for clues about the health of the tech sector and the broader economy. Microsoft, a bellwether for the tech industry, saw its shares tumble by 6%. This decline came after the company reported cloud revenue that fell short of analyst expectations. The news underscored concerns about slowing growth in a key area for Microsoft. Nvidia, another tech heavyweight, experienced a similar fate, with its shares dropping by 4%. The chipmaker's decline added to the negative sentiment surrounding the tech sector. However, not all tech companies faced headwinds. Meta, the parent company of Facebook and Instagram, enjoyed a surge in its stock price. This positive movement followed the release of its quarterly earnings, which surpassed market expectations. The results provided a glimmer of hope for investors seeking strong performance in the tech sector. Tesla, the electric vehicle maker, presented a mixed bag. Despite reporting an earnings miss, the company's shares edged slightly higher. Investors appeared to focus on Tesla's optimistic projections for growth in 2025, signaling continued confidence in its long-term prospects. As the closing bell approaches, all eyes are on Apple. The tech giant is set to release its earnings report after the market closes, and anticipation is running high. Investors are eagerly awaiting details on iPhone sales, a key indicator of Apple's overall performance. Strong iPhone numbers could inject much-needed optimism into the market, while disappointing results could send ripples of concern. Beyond iPhone sales, investors will be scrutinizing Apple's guidance for the coming quarters. The company's outlook will provide valuable insights into its expectations for consumer demand and the broader economic climate. Apple's earnings release has the potential to set the tone for the market in the coming days. A positive surprise could boost investor sentiment and lift the tech sector. Conversely, any signs of weakness could amplify concerns about slowing growth and weigh on market sentiment. Section 4, Beyond Tech. MasterCard shines, GDP growth cools. While tech earnings dominated the headlines, other notable developments shaped the market landscape. MasterCard, the payments processing giant, reached new all-time highs after reporting better-than-expected profits. This strong performance underscored the resilience of the consumer sector, a positive sign for the broader economy. Investors will be closely watching for Visa's earnings release after the bell, hoping for further confirmation of this trend. On the economic front, data released today showed that U.S. GDP grew at an annualized rate of 2.3% in the fourth quarter of 2024. This figure fell slightly short of the 2.6% forecast by economists, signaling a slight cooling in economic growth. While the GDP report suggests that the economy remains on a growth trajectory, the slower pace of expansion could raise concerns about the potential impact of rising interest rates and inflation. Investors will be closely monitoring future economic data releases for further clues about the strength of the recovery. Section 5, Headlines Beyond the Market. Bitcoin up, American Airlines tragedy. Beyond the world of stocks and bonds, two significant headlines captured attention today. Bitcoin, the world's largest cryptocurrency, extended its recent rally, climbing by 3%. The digital asset hovered near $106,000, buoyed by positive comments from Federal Reserve Chair Jerome Powell regarding banks serving crypto customers. Powell's remarks signaled a potential easing of regulatory concerns surrounding cryptocurrencies, providing a boost to investor sentiment. The cryptocurrency market remains volatile, but Bitcoin's recent performance suggests growing mainstream acceptance and interest. Tragically, the airline industry experienced a somber day as an American Airlines passenger jet collided with a U.S. Army helicopter. The accident, which resulted in fatalities, sent shockwaves through the aviation community and beyond. American Airlines CEO Robert Isom expressed his condolences, pledging full cooperation with authorities investigating the incident. The tragedy serves as a stark reminder of the inherent risks associated with air travel and the importance of stringent safety protocols.